Hello friends, welcome to Konexio Technical Insights. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators and candlestick patterns on Nifty, Bank Nifty and on the different asset classes. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that Nifty was in the past 3 weeks prior to past week. Nifty has been consolidating in a broad range of 15,700 on the downside and 16,415 on the upside. For 3 weeks, it was under the woods. It didn't reach those particular levels, and we were expecting a breakout about 16,415. And we had a view that once that particular level is broken out, then Nifty would be poised for an upside rally for next 2 to 3 months or 4 months. And we had a target of 18,000 for next 4 months from here onwards. So, and we had a strategy that buy on dips should be adopted if Nifty corrects in the first half of the week, and then one should try to create long positions at the lower levels. Nifty exactly behaved in the similar manner. It opened on a negative note, it corrected, and then it started rallying. And on Friday, we saw some sort of profit booking coming in at the higher levels because some sort of exhaustion, and on the hourly charts, Nifty was a little bit overbought, so some sort of profit booking was seen. Now let us go to the charts and let us try to figure out what could be a trend for the next week in Nifty and Bank Nifty. So let us go to the charts. This is the Nifty daily chart, and this was the formation of the last week. Now let us try to make some trend line, and so that we can figure out what is the larger degree trend. This was the multiple resistance area which has not been breached, and we are expecting again 18,000 to be breached or to be tested in next 4 months from the breakout point from these levels. Now this is almost what we call it as a rectangular channel. It is slightly what we call it as the downward falling channel. RSI is also into a comfort zone. This is Nifty daily charts. This was the week movement of the last week. Now let us try to figure out what we have observed on the weekly charts. On the weekly charts, Nifty has formed what we call an inward hammer or a high wave candle. So this candle would be termed as an indecisive candle. For whole week, Nifty remained in this particular range. At higher levels, it started correcting and just ended near where it opened on the start of the week. Now this is the parallel channel where Nifty has been moving since October 2021, and Nifty has been into a time correction since last 7 to 8 months. Now let us figure out what is a pattern formed on the daily charts. Last week we have observed that Nifty has given a triangular breakout, and after a breakout this could be just a pullback. So from here we were expecting a breakout. It opened with a positive gap, it traded higher, it consolidated, it went higher, and again it started witnessing some sort of profit booking after filling up this gap. This was the gap which was filled when Nifty was correcting. So this gap has been filled. Now some sort of profit booking could be seen, but the larger degree trend from here is still positive. So the view for the next week is buy on dips. This was a bearish pattern. Dow Jones has also ended on a negative note. So on Monday we might see some sort of correction which might see Nifty testing the levels of around 16,400 to 16,350. This could be the area where one should again create long positions, or those who are still long and are getting some sort of profit. If there is a minor gap up opening or a flat opening, one should try to book profits at these levels. Wait for some correction, maybe 1% correction from these levels, and then try to enter long positions at the lower levels. My comfortable level entering long position would be between 16,400 to 16,350. Now let us see the important supports and resistance level of the Nifty for the next week. So the important support in the next week for the Nifty is placed at 16,444 is the first support. If it breaks those levels, then second support is coming around 16,370 and third support is coming around 16,222. Whereas on the upside, the first resistance in Nifty is placed at 16,695. Then second resistance is placed at 16,793 and third resistance is placed at 16,888. So these are the important supports and resistance in the Nifty. Traders should try to monitor these levels and then trade in the direction of the major trend of the week. Now let us go to the Bank Nifty daily charts and we'll try to figure out what we have observed on Bank Nifty charts. Where again, last week we have discussed that Bank Nifty has also outperformed than Nifty. Nifty was yet to give a breakout, but Bank Nifty has already given a breakout. So now let us see what pattern has been formed on the Bank Nifty daily charts. So this is the overall long-term trend, similar pattern to Nifty. Now this is a downward falling channel. The Bank Nifty has been consolidating, has been moving. Now since last 7 months, since 7 to 8 since October 21, Bank Nifty has also been into a time correction with high volatility seen. You can see the swings. Maybe the swings are of 4,000 to 500 points in each swing. So this kind of patterns could be seen in the coming months also. Now let us figure out what pattern has been formed on the daily charts in the last 4 to 5 weeks. So this was the Bank Nifty daily charts. Again, it has formed some kind of triangle formation, or you can call it as an inverse head and shoulder. This is a shoulder, this is the head, and again a shoulder. So if we can consider this as an inverse head and shoulder, even if it has given a breakout, now price always, or most probably many times, price have tendency to give a pullback, and this is what we are seeing at this level. Now on the Bank Nifty daily charts, we have seen that this is a engulfing bearish pattern of the last 3 trading sessions prior to Friday. Now Bank Nifty has ended on a negative note. RSI is still tilting lower side. So we might see some sort of selling pressure from these levels. Some sort of profit booking can be seen if there is a positive gap up opening. Bank Nifty again can test the level of 34,740, which can be seen here. And this is the horizontal line where Bank Nifty can test, or it can pierce those particular horizontal line, or it might test the level of 34,590 odd levels. Now this could be the area. This particular area would be the buying levels. So I would wait for this correction and then we'll wait for the larger degree trend to be seen in Bank Nifty. So again, as I said, the larger degree trend is positive. Sooner rather than later, or sooner or later, we will see a Bank Nifty breakout above this 37,500 mark or 38,000 mark in next 3 to 4 months. But as of now, for next week, the strategy would be buy on dips, wait for some corrections, and then enter long at these lower levels. So now let us see what are the important supports and resistance level in Bank Nifty for the next week. The important support in the Bank Nifty for the next week is placed at 35,095 is the first support. Then second support in the Bank Nifty is placed at 34,819. And third support is placed at 34,115. Whereas on the upside, the first resistance is placed at 35,676. Then second resistance is placed at 35,958. And third resistance is placed at 36,083. So these are the important supports and resistance level in Bank Nifty. Traders should try to monitor this particular supports and resistance and try to enter long position at the lower levels once Nifty and Bank Nifty corrects from these levels. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to figure out, or we'll try to watch out we'll try to study the data of the options of Nifty and Bank Nifty calls, inputs of Nifty and Bank Nifty, and we'll try to figure out what could be the trend for the next week. Now let us see on the screen. You will see Nifty call option. In Nifty call, the action was seen in 16,700 calls, then 16,800 calls, then 16,900 calls, and 17,000 calls. Now here you can see there has been a drop in open interest. There has been a drop in the premium of Nifty out of the money calls. There has been a rise in the open interest. The implied volatility is in the comfort zone. It is just between 16.35 to almost 16.74. Now here, what we have seen that on Friday we have seen a sharp sell-off in the fag end or during the mid of the trading sessions. So because of that, we have seen that there might be call writing in Nifty strike prices. I mean to say, Nifty out of the money call writing could be seen looking at this particular data. So on the upside, I see that maybe 16,800 could face as a major resistance on the upside. So maybe any pullback might invite selling pressure at the higher levels. Now let us discuss what we have observed in Nifty puts. You will see on the screen the Nifty puts, the action was seen in 16,500 puts, the 16,400 puts, 16,300 puts, and 16,200 puts. Now here you can see implied volatility is rising slightly. It is between 18.38 to 19.71. Here the option premium is also deteriorating. I mean to say, just correcting. So maybe the smart money which has done put writing might have started booking profits at the higher levels when Nifty had started correcting from when Nifty was rising, and Nifty on Friday saw some sort of profit booking at the higher levels. So maybe the put writers had started booking profits. That is the reason why we have seen some sort of minor negativity or minor weakness on the option premiums, some sort of correction. So you can see rise in the open interest, rise in the implied volatility, and a drop in the Nifty puts, which clearly indicate that the upside could be at least capped for Monday or Tuesday. We might see some sort of correction, and then from the lower levels we might see buying coming in. So on the downside, I feel that the strong support is between 16,400 and 16,300. This could be the area, looking at this, the volume, the concentration of the volume. So this could be the area where Nifty might bring strong support. So most probably the level will be 16,300. I would be comfortable going long at those levels. Now let us see what we have observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 35,500 calls, then 36,000 calls, 36,500 calls, and 37,000 calls. Now again, yes, you can see there has been a significant drop in option premium. There has been a very sharp rise in open interest. Then there has been a sharp rise in implied volatility also. And as I said, the rising on implied volatility, Bank Nifty going into overbought region, some sort of profit booking was seen. That is the reason why we might see that the smart money had started writing out of the money Bank Nifty calls. So maybe smart money might have started writing 36,000 calls or 36,500 calls or 37,000 calls. So maybe for next, at least for Monday or Tuesday, the upside could be kept and 36,000 could act as the major resistance. So maybe any pullback or any gap up opening would invite selling pressure at the higher levels in Bank Nifty also. Now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 35,000 puts, then 34,500 puts, and 34,000 puts, and 33,500 puts. Now here you can see that there has been a rise in the open interest, volumes are rising, implied volatility is also rising, and option premium is also rising. So maybe the smart money might have started buying puts, because here there has been a slightly rise of the option premium of Bank Nifty puts. I mean to say, at the money also and out of the money also. So might be the smart money might be thinking that some sort of profit booking can be seen from these levels, at least for maybe a couple of days. So again, as I said, looking at the charts and option data of Nifty and Bank Nifty, the overall trend remains to be same. Strategy would be buy on dips, wait for some correction, maybe 1% or 1.5% correction on Nifty and Bank Nifty, and then try to create long position at the lower levels. But at least for the Monday and Tuesday, I feel that some sort of selling pressure could be seen. So any gap up opening should be used to book profits or go short, at least for 1% move in Nifty and Bank Nifty. And again, after a correction, try to create long position at the lower levels. Now friends, let us come to the final segment of our show, which is positional call. Now let us go to the charts and we'll see what I have identified in positional call. These are the pop-ups, because it is not the subscribed version of TradingView, but the charting software is very good. Now almost 30% of correction was seen on the IT index, and the stock Tech Mahindra has also corrected significantly. The price damage was seen from at least 1840 till almost 1040 levels. So it has significantly corrected. At least more than 30-35% of correction was seen. Now let us try to figure out the long-term chart of Tech Mahindra, and we'll see what kind of trend is seen, or what could be the trend for the next. Now this is the long-term chart. Let me put a horizontal line so that we can figure out. Now see, this was the trend. This particular region was the major resistance area. It took almost 6 months to break this particular level. When the stock was in uptrend, it consolidated for 6 months. This resistance took 6 months for a breakout around 1080 mark, and after breakout, a stock witnessed a rally from 1080 to 1840. And after that rally, again the stock has come to that particular resistance zone. Now it has become strong support area. So now you can see RSI. When the stock was making lower tops, RSI is sideways, or it has given some sort of positive divergence. The stock is consolidating, it is making base. Now let me show you what kind of pattern is being seen in Tech Mahindra. This is a parallel line. Stock has already made a base, or it is into a process of making a base. You can see a downward falling trend line, positive divergence in RSI. Stock is making consolidating at these levels. We might see some sort of correction from these levels also. I'm not saying that this is a base and it will start rallying from tomorrow onwards or from next week onwards. It might consolidate in this manner. It might come maybe around these levels, 1100, might consolidate and then start rallying from this level. So looking at this particular pattern, only for this long-term, this stock is for long-term investment perspective. For trading, it could be very difficult, because stock might go into a high volatility at least for next couple of weeks. So the strategy would be accumulate on dips. The current value of the stock is around 1147. Long-term investors can accumulate the stock on dips to 1100. My upside long-term target is around 1300 between 1350 to 1400 for long-term investment. At least the investment horizon would be at least for 1 year. So in 1 year, we are expecting stock to witness or test the levels of maybe 1350 to 1410. This is the gap area. So we will take 1410 as a target for next 12 months. So the strategy would be buy on dips at 1100 for a target of 1410 for an investment horizon of 12 to 14 to 15 months. So thank you very much, friends, for watching the show. Any comments, any suggestion you can give in the comment box. Have a nice trading week. Thank you.